We are here, we are here, we are here. One is an amazing day. Everyone is Cam Jones, FX Daily Analysis, and we are marking up EUR, EAD. We are on the monthly time frame. Price action, last candle to the right hand side. There's a bearish candle, also has multiple pushes to that area. Oh, that's that bottom. Gotta figure out what's going on here. Price action overall, the market, higher highs. Price action overall, the market, lower lows. Midpoint in the middle. We're also going to add the second level lows. Head over the price to see what's going on, what happened. So price action is coming from multiple pushes to that top. So we have 1, 2, 3, 4. So we have a quadruple top here. Market couldn't break. It came down to retest and pushed down to the second level lows. So what we're looking for here is the break of the market as we currently see. We're looking for price to return back to the second level lows of that resistance of the SR line and then push down further. Or the market can consolidate sideways as it's currently doing. So we have price action candle, last candle, price action, second last candle, and third last candle are all side by side. The wicks are all lined up together, so it created an area of support. So what the market did was it broke that support, tagged that bottom once, twice, 3 times. So we have a triple bottom in that area. We're looking for a break and retest, or we're looking for a W pattern to form. So that would be the first leg. We're looking for the second leg to come up in green, come back to retest to work its way up further with some type of incline W. Headed down to the weekly time frame. On the weekly time frame, we did receive the break, and we received 2 pushes up to that top, which formed a pattern in this area. So we have the break, which is the first leg, coming back as the second, third leg, and we got the fourth. Price action, green doji, push up to the top. Okay, it's a weak candle. So that's the retest. So we have a first, second, third, fourth, and price action candle. Second last candle is a push up. Price action candle is the doji, which is the retest. So the price action candle, which is the retest, stopped in the midpoint of the second last candle. So we're waiting for some type of pattern form. It could come up in green, close out, and if it does, you're looking for a candle to engulf the current price action candle and the second last candle to close out to see that market's forming that pattern to push that market up. If not, market did receive the break. So then we're looking for the first leg, second leg, third leg. Like I said before, price action still the retest of that midpoint. If we receive that price action candle push down further with the bearish red candle and close out, the market can push down for that M. After that, we're looking for a follow-up with the retest. We're looking for price to come back towards that M pattern or somewhere in that area to form that double top retest for that market to work its way down. And if not, we're going to range it off right now. Market could be in a range currently, working its way sideways between second level lows and the support that is currently on now. And price can be just bouncing up and down in that consolidation until we receive a pattern or a breakout of that area. Price action on the daily time frame is a doji. Second last candle is a doji as well. Third, fourth, fifth as well. So 5 candles in a row before price are dojis, and we're going to discuss what happened in that market. On the earlier time frame, we did identify a double bottom, and on a daily time frame, we identifying 3 pushes to that bottom creates that triple bottom. So we do have that overall break of the market, which is the first leg, second leg, third leg, fourth leg, retest, market pushed up once, still retesting that area of highs. So we're going to see if price, so market price broke a little bit. Let me see. Yeah, price action broke a little bit, came back to retest, and that's the current price action candle. And if we receive another red candle pushing down, that market can come down for that resistance, multiple pushes to the top. So in total, we do have 1, 2, 3, 4, 5, and that's exhaustion. So the market can come down from this 5 if it doesn't respect this area of support, at least to that midpoint. So market come back at least to this midpoint and then work its way up. And if it does happen, so market's coming from an overall first, second, third, fourth retest, market pushed up once, retest, and market pushed up twice. Market's coming from 1, 2, 3, 4, quadruple top overall, or triple bottom. Excuse me. It's coming from a quadruple bottom overall, or a triple bottom in a retest and mark it up. And we can see that pricing also consolidate sideways within this areas as it currently doing, so we can get that market ranging. Headed down to the 4-hour time frame. Price action on the 4-hour time frame is a doji, so it's a retest of the previous area of resistance. Price action candle just formed a solid bearish candle trying to work its way down. If we receive this price action candle, that's going to engulf the second last candle and close out below the body end, that market can be pushing down further to that area of support until we receive the break, the retest, and that market to come down further. So taking a look at how many times that price action highest highs tagged that area overall, first, second, third, fourth, retest, 1, retest, and it's trying to push down for the second time. So it's identifying a quadruple top or triple top in a retest that can push that market down. And if not, that market can be respected by multiple areas of support for the first, second, third, fourth retest, and market pushes up, still identifying a triple bottom. But you will want price action to engulf at least the second last candle, maybe the third last candle in the market to push that market up as well, because the third to last candle was a spike up to the high of that resistance. So there's a chance that market can come down unless we see a pattern that's going to identify that market's going to do what it do. Headed down to 3, 4, 3 is identifying the same thing. Headed down to the 2, a little bit of a push in the market. Not really too much of a push, I shouldn't say that. It's more like price is still trying to identify itself and do what it do. We got 3 bearish candles working its way down. Price action stopped at that midpoint, so we have price action high, price action low, midpoint and middle. Price action is currently respecting the midpoint. It hasn't broken yet, so if it breaks, we look for the break and retest, or maybe just straight bearish candles dropping down. If that market is respected, we can see the market's coming from this area of that double bottom. So we do have that first, second, third, fourth retest. Market's pushing up, and we do have multiple pushes overall, but just trying to pay attention to what's going on near price. Headed down to the 1-hour time frame. We starting to receive a break in the market. Okay, so we're going to see if that market's going to break all the way through as we walk down further, or eventually will. Price is below the previous candle, wick is below the previous candle, which can push that market down as well. 1 hour 45 is identifying the same thing. On the 30-minute as well, still identifying the same thing, receiving the break of that market with the bearish price action candle. Headed down to the 15, same as well. Headed down to the 5, same as well. Second last candle is a retest, so the market broke. Second last candle came back to retest, price action pushed down a little further, but it still hasn't broke out that second last candle, that doji, so you gotta be careful of that. And same as well, this is still a doji in that market, so 5 minute, 3 minutes identifying the same thing. Headed down to the 1, we have a spike down to the low, so this area may be respected for first, second, third, and market push up for that fourth. If not, that's the break retest. And we just gotta receive bearish red candles to close out to push that market down further. Okay, guys,